Welcome to Rich Tribe. You know, nobody really enjoys paying taxes, right? And that simple fact leads people and companies down two very different paths to lower their tax bill. One path is just a smart financial move, and the other? It's a serious crime.
Right. So, where exactly is that line? How can you tell if what you're doing is clever or if you're actually committing a crime?
Okay, let's just get right to it. The absolute core difference here, it all comes down to legality. Tax avoidance is when you use the tax system completely legally to your own advantage. You're basically finding ways the law allows you to minimize what you owe. But tax evasion, that's a whole different story. That's when you're illegally and intentionally trying not to pay. We're talking straight up fraud.
So, if we look at this table, a few things really jump out, but the biggest one has gotta be timing. See, avoidance is all about planning ahead. It's something you do before you even have a tax bill. You're setting up your finances in a way that legally shrinks a bill you'll get in the future. Evasion, though, that happens after the fact. You already owe the money, and then you use illegal tricks like, hiding income or faking your records to get out of paying what you're already on the hook for. Okay, to really get a handle on what avoidance looks like in the real world, let's talk about a super famous and kind of ridiculously named strategy, the double Irish with a Dutch sandwich. Now, it sounds crazy complicated, but the core idea was actually pretty simple. A big company would funnel its international profits through an Irish company, then bounce it to a Dutch company, that's the Dutch sandwich part, and then finally send it to a second Irish company that was secretly being run from a tax haven. This whole journey was designed to exploit legal loopholes and make billions in profits basically disappear from a tax perspective.
Whoa, hold on a second. Creating shell companies in tax havens and then shifting profits around. I mean, that sounds totally illegal. How on earth do massive multinational corporations get away with that stuff?
Well, that's the thing. It is legal because they're not breaking the law. They're exploiting loopholes within international tax law. And this Starbucks example just perfectly shows the insane scale of it. They use these things called controlled foreign companies, which are just subsidiaries in countries with super low taxes, to legally move their money. The result? Over 15 years, on billions in revenue, they paid a corporate tax rate that was just a tiny fraction of a percent, all perfectly legal.
Yeah, and this research map, it really paints a clear picture. It visually shows you these two separate universes. Over here, you've got tax evasion. And look at the words it's connected to. Bribery, corruption, fraud. It's all criminal stuff. But then you look at tax avoidance, and it's linked to things like corporate governance and business strategy. The connections themselves tell the whole story. One is a crime, the other is a corporate playbook.
Okay, so we're not talking about clever accounting tricks here. This is just straight up lying to the government. This is the stuff that lands people in serious trouble.
Exactly right. And the Panama Papers leak? That's the perfect example of this in action. I mean, look, having an offshore company isn't always legal. But what those documents showed was how thousands of them were being used for illegal purposes. Things like fraud, dodging international sanctions, and, you guessed it, tax evasion. And that's what led to huge investigations and prosecutions all over the world. All right, I think I've got the legal distinction down. But that brings up a whole other question about avoidance. When you see a massive company making billions of dollars in a country, but using these super complex schemes to pay almost no tax, I mean, even if it's legal, is it right? And that is the absolute heart of the matter. The whole conversation shifts from what's legal to what's ethical. This quote from the research really nails it. A lot of these so-called legal loopholes didn't just appear out of thin air. They often exist because of powerful corporate lobbying and political influence that literally bend the tax code in their favor. So what you're saying is, even if they don't end up in a court of law, they still face trial in the court of public opinion. People see it as fundamentally unfair when these huge corporations aren't paying their share, and that can do real damage to a company's reputation. It can even lead to things like boycotts. You got it. So when you cheat the system, the price is high, but it's different depending on the path you take. For tax evasion, the consequences are what you'd expect: serious legal penalties, fines, even prison. For tax avoidance, the fallout is more about reputation and business, public backlash, boycotts, and a damaged brand. And because of that public pressure, a lot of governments are now scrambling to create new rules to close the very loopholes that made all this possible in the first place. Now, before we get to our final and maybe most important point, if you're getting something out of this, please do us a favor and subscribe to the Rich Tribe channel, and don't forget to like, comment, and share this video. It really helps us make more content just like this. Okay, so here's the bottom line. Whether it's illegal evasion or super aggressive but technically legal avoidance, the end result can look disturbingly similar. Both of them undermine public finances, they drain money from social programs, and they can seriously destabilize whole economies, especially in developing nations that really depend on that corporate tax lending.
So it really makes you wonder, is the goal to pay what's fair, or is it just to pay the absolute minimum you can legally get away with? What do you think?